Along with extra time and lower instances of unpredictable weather, there are a variety of benefits that come with fall ESN application. Learn more at smartnitrogen.com.
Let's get rolling with the beef market update. We're talking to Anne Wasko, the Gateway Livestock Exchange. Anne, how are you doing?
I am good today, Sean. How about you?
I'm doing really well. Hey, happy Thanksgiving.
Yes, same to you.
Yeah. Now, you're the beef lady, but are you doing a turkey this weekend?
You're not going to go there, seriously?
You're not?
No, we've got lots of nice beef in the freezer for this one.
Prime rib. Here we go, baby. Okay. Okay, before we get to the markets, are you a barbecuer or a smoker?
Oh, it depends on what we're doing. So both. We have both on the deck.
Nice. Yeah, you got to have that versatility for sure. You got to have that versatility.
Yeah.
Okay, what's happening this week in the cash market?
Well, in the U.S., the South looks like most of the trade's going to come in anywhere from steady to one higher. So Texas, Kansas, 186 to 187. And it certainly firmed up as we went through the week. The North, we're going to call it 187 live and 296 stressed. And that's pretty much steady with last week's trade. So steady to a buck higher, so, a good tone. I think, the news of the week was certainly the jump in the cutout, that wholesale price. As packers reduced kills, we saw strength to the cutout. It jumped $10 on the choice compared to a week ago. So last night's close was just a squeak under 310, and the select is sitting back about $19.25. So good strength, not overly surprising as we get closer to November and some good beef holidays in the U.S., but certainly that smaller kill that we've seen in the U.S. with support to the cutout. Bringing things home to Alberta, really quiet, Sean, on the cash trade. We did see feedlots asking for 412 delivered on a dress basis, but I didn't see that materialize. There was a little bit of trade at steady money, which is still that 405. And again, I think a lot of cattle being kind of held over into next week or maybe even beyond. And don't forget, Canadian packers were buying for that holiday week, as you mentioned. Our Thanksgiving here in Canada is on Monday, and so it was a short week, and so maybe some of these cattle feeders decided, given the strength in the U.S., let's push these cattle another week. But let's talk about carcass weights.
Okay, what are you seeing?
Well, pushing cattle another week. For this past week, we saw steer weights in Canada jump 11 pounds over the previous week, so we're now at 961. That's 3 pounds heavier than a year ago and 12 pounds heavier than the 5-year average. So, the conditions have been superb. Weights have been big, both in the U.S. and Canada, and it sure doesn't look like we're going to deviate from that situation at all. So that's the train we're on.
And how much of that is just, there's market conditions and, the ability, it's been a really good feeding season, but also the genetics. We're able to put more weight on some of these animals than we could when you and I were youngsters in the industry.
Yeah. Oh, for sure. I mean, first of all, the overall driver right now is the economics to put the gain on. But as you've just outlined, whether we're talking about genetics or nutrition or just the overall management today at feedlot levels, it gives us the ability to do it. But the driver is certainly the economics to put that pound of gain on.
Yeah. What can we expect, do you think, from packer purchasing behavior here going forward over the next 1 or 2 months? Is it a case of not wanting to be hung with expensive inventory, or do you expect them to be aggressive in terms of some of the forward contracting, or what do you expect here as we get to the back end of 24?
Well, on the beef side, there's no question the packers are going to want to stay with inventory. This is a great demand time as we head into November and December. So I don't think in terms of that piece of it, you're going to see anything, backing off. We'll still see some strength in the cutout. Packers do know, especially south of the border, there's more cattle on feed. And so, they can certainly plan accordingly in terms of inventory and how much cattle they've got out in front of them. Here in Canada, I think same thing. There's the front end supply is very comfortable, so it's going to be that consistent push and pull, transactional tug of war between both parties, packer and feeder, as we go forward. I don't see that changing. Nobody's going to get caught short here.
Yeah. Now, the last couple of years, feed yards could be really aggressive early in the fall run because a lot of cattle were coming to town because of the drought conditions. This year is kind of it's flipped where the fall run's off to a very slow start, hard to get your feed yard full. What are we seeing in terms of the fall run activity?
Well, it's still been, the yearling run's been very consistent as we've gone through the last few weeks, as it normally would be through September and the first part of this month. But the calf run just getting going in terms of those spot sales. We have had a lot of forward contract sales, but those cattle will be getting delivered here, second half of this month and into November. So we'll still be seeing feedlot deliveries from those forward purchase sales. But the cash sales at the auction markets have been slow to get going, but that's changing as we speak, Sean. So, special sales starting to show up now, and that'll carry us right through the rest of the run. And we talked about this 2 weeks ago, Sean. Producers, cow-calf producers, I think, have more options in terms of, what their individual needs, wants might be in terms of now we've got some feed in the stackyard. We've got these great prices. Do we make decisions in terms of, holding something into the new year, selling steers, keeping heifers, if not right through to breeding, certainly until spring. So lots of different decisions, I think, still on the table.
Live cattle exports for August. We got some numbers there.
Yeah, StatsCan came out with the data. We saw another busy month for fed cattle exports in August. They were up 9%. Year to date, Sean, we're up 44% in our fed cattle exports. That's about 87,000 head more than the same time last year. And every month in 2024, we've seen year-over-year increases in fed cattle trade. So that's been another piece that, even though we maybe haven't been harvesting them here in Canada, we've certainly been exporting them. On the flip side, though, cow exports down 32% in August, and year-to-date we're down 13%. If you remember, we talked back during the Cargill Guelph strike, we saw a lot of, especially cows, both fed cattle and cows being exported, but that certainly has changed here in, the last data is for August, with the exports dropping off pretty substantially.
So are those plants like Hiram, Greeley, Pasco, are they being aggressive on Canadian cattle? Like what is there a market driver there? Why those cattle, we've got an increase in those live cattle exports?
Oh, yeah, certainly. In terms of movement that direction, whether it was through forward contracts or grid options, but certainly it's been a very consistent supply of cattle moving that direction, and I suspect it's not necessarily all spot trade. I think a lot of it would be in the forward contract line or basis contract type business.
Yeah, interesting. Well, hey, Anne, thanks a lot for joining us here this week on the Beef Market Update. Happy Thanksgiving to you. Enjoy that, whatever cut you've got planned for that smoke or that barbecue, enjoy it.
Okay, same to you. Thanks, Sean.